another day. A beautiful day. Volatility on the charts. What's up, everyone? Good to have you here. Wow. Were we waiting for a bit of a move to the downside? Very nice. Very nice. Very nice. What's up, everyone? Hopefully you're doing good. So, what we're going to cover in the live stream is an analysis from weekly, daily to the pretty much 1 hour time frame. And of course, Elliott waves is the expertise. Guess what position I'm in? It's still here. Anyway. And then call it a night, no? But hopefully you were prepared, risk managed, right? It's all about management of risk. So, and if you, let me quit the music here. And if you are risk managed, then these type of scenarios are actually very enjoyable. So yeah, very, very volatile day. Very nice. And let me make this one white. Wait. There we go. So welcome everyone. Good to have you here. I do have to keep a side eye on my other screen because of course, my own stuff that I have going on here. But yeah, nice to see you. Erik, Boris, Jeffrey, VE, admin, Chinese numbers, I suppose. Mark, Rayat, DOG, Max Trades Crypto. Yeah, how you doing, man? Coming, jumping in all the way from Cape Town. Alfonso, how you doing? What happened? Bitcoin happened. Florian, Bitcoin made the top before in this bull run. Now all is over. It's always interesting to me that when price is moving up, everyone talks about unlimited gains, no drawdowns. Price only goes up 500K, 100K, 300K, 1 million. And then on the channel here, of course, we're very realistic because the highest probability as price was creating this high was the blue line. Now, so as price is moving to the downside, you then get, of course, people talking, it's over, bear market, down we go, back to 15K. I don't know. I haven't seen Twitter and stuff, not really involved, but it's just a retracement. It's very normal in a bull market, right? Continuing the range, getting a move to the downside, and yeah, here you are. No, so potentially, by the way, a finished 5-wave structure. Wave 3 is longer than wave 1, even though 5 is longer than 3. In that case, that is no problem because 3 is not the shortest. So there is an opportunity if price can form a range here and get a bit of a bounce. There's actually potential for a 5, a 3, and then another 5. In a bearish zigzag. Of course, bullish would be a flat, but I don't like the flat. There's low probabilities of flat. So yeah, it's absolutely normal, right? Price moving to the downside. And as mentioned, if you're risk managed, these are very nice trading environments. It's a great period. Right? Price moves down, it gives opportunities. Of course, if price is moving up, it also gives opportunities, but price moving down also gives opportunities. So it's a beautiful day. So yeah, top is in and bull market is over and It's way too early to call for bull market is over and those type of sentences. From an Elliott wave point of view, you would need to move to at least minimum 85K before you can really start considering that a bull market might be at least the bull market here. This move to the upside is finished. Minimum 85K, and that's only when we start to consider it, right? So no. at the moment, that does not have the highest probability. But we will analyze the charts, of course. So, and then you'll have a good idea of where we stand from an Elliott wave point of view. Yes, sir. Reloads, Rodney, Dusek, Sam. What's up, everyone? Wiped out my 12K. Sam, I'm sorry to hear that, man. I'm sorry to hear that. Trade safe, yo. Like, I have a couple of shorts that go into psychology, risk management. There's a video dropping on Saturday in 2 days, which is about building a plan and a strategy, which includes also management, which is kind of like step 5 and 6. So, I recommend checking that one out. But I hope you're doing good, quote unquote, of course, because of what happened. But hopefully you managed to review what happened, and you're going to use this as a lesson to learn from, right? Like, you can't get the 12K back now, right? Don't get into revenge trading. It won't end well. But at least you can learn your lessons from it and have that in your pocket for the next time you trade, no? Because if you, if you wipe something out and something went wrong in the plan, in the psychology, and the sizing, on pretty much all of the fronts, it's an expensive lesson, right? You can make your tuition fees as expensive as one would like in this industry. No? So stay safe, and sorry to hear about the 12K. I can imagine you cried. I remember the first time I cried after losing a big portion of my gains at the time, and I went a little bit in drawdown. But my first trade ever was a very big win. I had no clue what I was doing, but I happened to win very big. And then I think like 2-3 weeks later, I lost everything plus a little bit more. That day I cried. But that was the day that I started studying, which now brought me to, of course, where I'm today, and of course for years already in the industry now, but it brought me to where I'm today. So I used that as fuel to get my shit sorted, no? Good evening, Jannis, Shoks, Manuel, Ovind from Norway. Can see it because of the O with the stripe. Moab, Albert, Driftholics. What's up, guys? Jay, as a crypto investor, what is happening is sickening. Normal market behavior. At the same time, of course, this is actually very healthy. I mean, look how tiny this drop is. People, of course, love this, but they hate this. It's necessary in the market. Any bull market has these type of retracements. This is still peanuts, right? It's still a very, very small retracement in a bull market, right? You definitely had some big 30, 40, 50% retracements in this bull market here, right? And then, of course, eventually you went down and back up once more. So, yeah, it's part of the industry, part of the chart, and it's nice, right? It's good. It's part of the bull market as well, and it's healthy for the markets. Only moving up and up and up is, of course, it's what people wish for, but that is not, that's not how it works, no? So, and besides, of course, a move to the downside like this, as we have been covering, you're ranging here, right? You have like a channel, you move out, you channel again. This is a typical impulse, right? Couple of 1, 2s, 3, then a couple of 4, 5s. Eventually you get a bigger retracement. This still is wave 4 potential for then another 5, hit 111, 12K, and then you get the bigger retracement. This would be your 30, 40, 50% big move down, basically. While this price action here can still very much be part of a wave of 4. But of course, the analysis is yet to begin. But risk management also as an investor, of course, depends where you invest and where you DCA on how you probably manage your positions. But also as an investor, right? I think Elliott waves is really, really good from an investing point of view. If you're an investor, higher time frames. Elliott waves is incredibly accurate on the higher time frames as well, besides the lower time frames. And of course, you can feel a move like this is happening when, as explained, you start to move sideways in 4s and 5s. So of course, one has to risk manage. Umed, welcome, and thank you, Sir AJ. What's up, Ice Cubes lady? Wow, everyone popping in. Captain Swag, what's up? Dario, Christian, what's up, guys? Louis Guerra, 87.5 next. Let's if you do not reclaim this support again, then my next area of support is 90. Actually a little bit higher. I do have some levels a little bit higher. What's that? 92. And what I did is pull a couple of volume profiles so that I have an idea of where the volume is distributed in this range. So you saved my fund. I guess cheers, Louis, but in the end, you saved your fund. I'm not a financial advisor, just a guy that shares his Elliott wave analysis. So, yeah, more important than Elliott waves for trading. Risk management for any strategy is most important. You can be very, very good in Elliott waves or any other strategy, but if your risk management sucks, you're never gonna make it. So risk management is always most important, together with psychology, actually. Should I get out of all trades or keep funding? Depends on your plan. People always tell you that it will pay off if you keep going, but what if it doesn't? At what point should you leave trading behind and pursue other paths? That's a very personal question, I suppose. What's your pain limit? So, look, I'm going to the weekly because we're going to start the analysis, but the question you got to ask yourself is, how long do you give yourself to learn? Because if you imagine you're just starting out and you got yourself 5K to trade with. First of all, I believe that's too much, because if you are not experienced, you don't have a plan, you're highly emotional, you better put $100 in your account and you trade with $100. 1% risk, $1 trades, prove that you can get a significant amount of profit, and I'm not talking thousands bucks, but increase your $100 by 50% to 150 or 200, right? Double your account with 1% trades, okay? So you need to build a plan, you need to have consistency. That is where you can prove yourself without paying a lot of tuition fees. Now, the market is going nowhere, right? It's going up, it's going down, it's going to 15, it goes to 100, it goes to 70, it goes to 200. It doesn't matter as long as you are not married to the asset. You can trade Bitcoin at 200K, you can trade Bitcoin at 10K. Doesn't matter, right? Does not matter. The market isn't going anywhere, right? Opportunities are there every day. If you are a trader, it doesn't matter where price is. If I was trading by myself, not making content, I would remove the price scale here, because the price scale does not give me anything, right? It doesn't help me at all. I know my levels and all that stuff. I don't even need price for this. So I recommend starting very slow. And even though $1 trades, yeah, it's boring. But if it's boring, then you're already going wrong from the start. Because if you're not excited with $100 trades, then you can maybe be excited with 5K and lose 5K. You'll be very excited if you lose 5K. You know what I mean? It's the wrong approach. If you are in this industry to be excited, right? Like gambling, you can go to a casino, you probably have more luck. Then that's the wrong attitude, no? But if you're here and seriously want to participate as a profitable trader, then the $100 1% trades will surely help you out. You collect data, statistics. Watch the video that's going to drop on Saturday, right? The one on Saturday is really, really, really going to help many people out, I think, as those are the 6 steps to become a profitable, consistent trader, having your own plan. So when do you give up? You give up when, yeah. Hopefully you don't give up because your money ran out, because you've actually been sensible, right? So look, I do think if you really try your best, there's always a way. But I mean, yeah, maybe not, right? It's different for everyone. You can have this much talent and then it's hard work, but hard work beats talent. But yeah, maybe there's a certain talent involved, but I think that everyone can make it. The question is, how much effort are you willing to put into this? Are you here for the short-term gain or the long-term gain? Make a plan, not make a plan, right? It takes months to make a plan, no? Are you going to start with $100 or are you going to drop in 10K and then hope for the best? Lots of questions. Hard work beats talent when talent doesn't work hard. Exactly. You're going to pull a superhero move and stop the crash. I also got a red button on my desk. Yo, maybe a Band-Aid. How you doing, man? Shirley, welcome. Yeah, of course, you're awake at that time. Down a lot in spots. Hoping for a Santa rally. I know. Yeah, the spot positions definitely hurt, of course. Unless, of course, somewhere managed after such big gains, once you start moving sideways here into 4-5s, it of course starts to make sense to take at least, not financial advice, but yeah, you gotta have a plan. And the plan from an Elliott wave point of view is chuck, and now you start to do this. So 4-5s, retracements are definitely part in 4-5s. We've been talking about it so often on the channel. Now, this is not a financial advice channel. You got to go to a bank. But from a probability standpoint, what's happening today is I mean, it's good. So, what a day. How long has it been since the last impulse to the downside? That one was 29th of July. Was it that one? Arguably, either this is a C or it's a zigzag, by the way. But if we talk about a sharp move, then this was the latest sharp move down, of course, that created the 49K low. Okay, let's start the analysis because holy moly, we can keep talking now. How to do hard work in trading. Make a plan. On Saturday, so in 2 days, a video is going to drop, right? And that's probably the most important video on my channel so far. Now, mind you, it's the first time ever I'm actually recording like a talking head video. So I have the camera, I had a script, never done that before. So, take it easy on me. I'm not yet as experienced. So maybe you see my eyes a little bit when I'm reading, but we made a script preparation, made sure it's good quality, like text. Like the 6 steps are very famous on my channel because it's something I created. For the ones that do not know about it, it's 6 steps on how to become a consistent, profitable trader, steps that I followed myself in my career. It's very easy to follow. It just takes time. And you can make a plan and be profitable in 30 days. You can easily do it in 90 days or longer, right? Depends on the tools that you like to use. So, yeah. Will it go down to 90K? Possibly. We're actually, we're doing, price is doing its best to get down there, but there is the potential to count a 5 wave on the lower time frames. That's finished. So, okay, let's start. I have to watch from the beginning. Oh, we're only starting now, Sibel. Why is my trading chart a line chart now? Come on now. When did that happen? There we go. Back to actual candles. Ta-da! Okay, let's start. Thanks, Mark. Yeah, I mean, after the analysis, well, of course, a bit of chatting Q&A, but after the analysis, of course, eventually I got to go as well to bed, but or like a Netflix series with too many seasons. Okay, let's start. You'll get the insights when we actually get going. So on a weekly time frame, right, the highest probability while I refresh my browser is what you saw on the chart. That is your conservative bullish scenario. Always better to first be conservative before being way too bullish. So on a weekly time frame, live stream time is, by the way, 26 minutes. So on the weekly time frame, your first scenario here is arguably wait, holy moly. Hello, Koen? Okay, let's start. 26 minutes. On the weekly time frame, your highest probability Elliott wave scenario, which is a conservative scenario, is a 5-wave impulse to the upside, and after 5 we get a bigger retracement, right? This is your conservative scenario. We have a more bullish scenario, but as long as we do not see certain signs, which I'll explain in a second, it's not the highest probability scenario. So your target area for your 5 is 81.3K to 129K in this particular scenario. Now, based on the local structure to the upside, we preferably still move here in a 4 and look for another move to the upside in a wave 5, okay? In other words, create one more high, then get a bigger retracement to the downside. Now, that bigger retracement to the downside is the same in your more bullish scenario. So in your more bullish scenario, you're looking for continuation, right? Much higher prices. Now, in this particular scenario, though, what we want to see is volume to increase on my Coinbase chart. Not on Binance and stuff, on the Coinbase chart, which at the moment is not the case. We made a higher high here on a lower amount of volume, which is typical for 3, 4, and then looking for a 5, right? Now, if volume increases as price moves up and you take out this volume pivot, that is the moment where we can really start considering your more bullish scenario. But we are not there yet. Alternatively, if you move way above the target area of a 5 and you're getting to 200K, of course, that's also the moment where we're going to be talking about this scenario, right? But at the moment, both of these structures, as you can see, if you look at the polylines, I have a summary of the lines here, right? If you look at the polylines, then on the quote-unquote short term, because this is a weekly time frame, right? You're looking for a similar movement in price. But the bullish scenario comes back up, does not change the structure, right? Okay, so that is your weekly time frame Elliott wave scenarios. On the daily time frame, this is what we were looking for. So this was the polyline that we had on the chart. 1, 2, 1, 2, 3, 4, finished 5, looking for a 4, and then another 5 towards the upside. Remains the higher probability scenario, as you will see in a second when I cover here the daily bearish scenario. So a double 1, 2, still looking for one more 4 and 5. Now, the moment we make this 5, right? If price goes towards the upside after 4, the moment you would make this 5, that's the moment where one really has to start looking out for bigger retracements. There is the potential of adding another 1, 2 and another 4, 5, but this structure is a big mess to count as an impulse and a big corrective structure, right? The alternative here is actually a triangle, and then you start counting here 1, 2, 1, 2, 3, 4, 5, 4, 5, right? So currently this is still your highest probability scenario. Retracements are part of the game. The blue line, as mentioned in the previous days content and last week, the blue line has the highest probability scenario, the highest probabilities, which is seeing a retracement to the downside. Now, the common target for your wave 4 is the 236 to the 05, which is 96.7K to 83.6K. Invalidation 77.7K. Arguably, your invalidation is a little bit higher. Why? Well, a wave 4 of a higher degree, which is the blue wave 4, most commonly retraces to the wave 4 price action of a lower degree, which is the white wave 4, which is the price action pretty much between 90K, and then of course if you take this high into account, it's 103K, but the lowest would be 90K, which arguably is around your 382. So with a little bit of margin, moving towards that 382 is perfectly fine. Taking out the lows, no problemo. The moment you start to take out this low, however, that's the moment where things start to become a little bit dangerous, because generally a wave 4 of a higher degree is not going to move this far below your wave 4 of a lower degree, right? Now, just as an example, this wave 4 is 1 degree higher of this one, right? So inside this wide wave 3, we have 1, 2, 3, 4, 5. This is a wave 4, which is a lower degree than the wide wave 4. You can see we create a 3, we come back down. What do we test? The previous range, right? We do not move below it. Moving below it, no problem, right? For this wave 4, but you don't want to move below this one. That would be a little bit meh. So preferably your target is 96.7 to 89.4K. That would be nice, right? And then you look for continuation. Now you also see a vertical line on the chart. And the vertical line on my chart is a fib time. Now, a fib time is used to compare waves in time. And in this case, I am comparing wave 2 in time with 4 in time. In Elliott waves, it is most common for a wave 4 to be equal or longer than your wave 2 in time. So preferably, your wave 4 ends after the 30th of December. Which pretty much is around New Year's Eve, no? But that's minimum, right? Preferably it ends at least around or after the 30th of December. And then you get your early, like first quarter pump in this particular scenario in 2025, no? Now, price move down, we have now hit the 0.236. As you can see, a little bit of a reaction here when we hit the 236 as well. That's something that we like to see. That's perfectly fine. But what you can also see, this low now is made far before we even touch the 1-to-1. So what would be nice for a wave 4 is to create a bigger sideways structure, right? Okay. Your bearish scenario is the one on the chart. Of course, we also prepared this one, right, from previous content, 1, 2, 1, 2, 3, 4, 5, 4, 5. Now, this is indeed where people say, oh, the top is in and ta-ta-ta. This would be the way you would count it. So this is your bull market is over for now, and we get a much deeper retracement type of scenario. However, from an Elliott wave point of view, it has lower probabilities. And that has to do with this section here. So in this impulse to the upside, we then count 1, 2, 1, 2, 3, 4, 5, 4, 5, okay? Now there's two things here. First of all, your blue wave 4 is a lot shorter than your white wave 4. And I actually got a question about this in the comment section of my previous video, right? Someone asked, hey, Koen, when you have a multi 1-2, right? And eventually you get a multi 4-5. Do the wave 4s of a higher degree and the wave 5s of a higher degree, do they need to be longer in time and price compared to the lower degree wave 4s and wave 5s? Right? They're a higher degree, so it makes sense. Now, in Elliott waves, one wave 4 can be a sharp zigzag, right? Your wave 4, for example, in blue can be a sharp zigzag, while the wave 4 in white can be a triangle, meaning likely in that case, your lower degree 4 being a triangle is longer in at least time compared to your blue wave 4. As a triangle tends to take a lot of time, while a zigzag is a very high volatility but short corrective structure. So a wave 4 of a higher degree doesn't need to be longer in time and price. However, it is of course common for it to do so because it is a higher degree Elliott wave structure, and typically with degrees, time and price become larger as well, but it's not a requirement. So the local structures are always most important. What we can see is that this 4, right? So I spoke about price and time. This wave 4 here is incredibly short. So your wave 4 in blue is shorter than your 4 in white, meaning your higher degree 4 is actually shorter in time and price than your lower degree 4. It's not as common. but mainly your 4s are compared with their 2s. That's what you do. You compare wave 4 with wave 2. And in this case, a fib time taken from 2 compared to this 4, well, you can see that the end of your wave 4 is on top of the 0.382. But the 0.382 is for a wave 4 a very rare target. It's a minimum time target for a wave 4. However, it is not a common target. The common target for a wave 4 in time is the 1 to the 4 fib time, right? That's your common zone, because a wave 4 typically is longer than your wave 2, or at least around the same size. But if I toggle on the 1 to 1 fib time, then you can see we didn't even end anywhere close to the 1 to 1 here, right? In other words, the probabilities are higher that this drop is part of a corrective structure, not an impulsive structure. It can be an impulse itself, but the probabilities are higher that this structure is a wave C or a wave A of a zigzag, for example, right? But it's not a trend changer, okay? In probabilities, at least. At the moment, the probabilities are higher, it's corrective. And that has to do with this scenario having lower probabilities because of your 4 here, compared to a much healthier looking 5-wave impulsive structure. By all means, of course, even after this 5, you eventually do expect a bigger retracement to the downside, no? So yeah, you are getting closer to a bit of a top, let's say, right? Just like we covered on the weekly time frame. Right? But preferably, just like my polylines here, from a probabilities perspective, it still makes more sense when we count this structure up to get a corrective move, go back up, take out the high, 112, 115, who knows, 120, and then get a bigger retracement to the downside. And then this retracement, which of course we will analyze in detail, that's what's going to give us the probabilities of moving up or we go down. Right? So the daily polyline, this was your and is still your highest probability polyline. For the ones that are new, in my analysis, generally I cover either one time frame or multiple time frames. And then I always end with probabilities, right? This was the probabilities of this morning. And then I always show the polylines at the end of my video, which basically summarizes the price action of the different high probability scenarios, right? And sometimes there's a nice amount of overlap. And it makes it very easy to read what is expected, right? And then we have the 1 hour as well, but we'll get to the 1 hour. No? So, okay, now we go to the 1 hour time frame. Okay. Let's start with the support. Get a lot of questions, of course, about support. So, to the downside, these are the levels on my chart. These are all the levels. So let me remove this box. We are now, let me remove these two to keep it clean. We're at the white box now here, right? And below us, it's a bit of a gap now. And then you have 92, 89, 87, and then you have 81 and ta-da-da. And then you get, that's very, very low for now. Now there is, and this was the psychology scenario of a little bit ago. Of course, there's a lot of liquidity resting below these lows, which is very interesting to take as well. But these are the levels that I have on my chart. In case you want to copy them. And I pulled a couple of volume profiles to also get an idea of how the volume is distributed in this range. So different volume profiles. You can see where they started. Beginning of the range, the first high here, second high. And that creates these volume profiles because it gives me an idea of where the volume is. Now, from an Elliott wave point of view, we have, of course, this move to the downside. This is irrelevant. That's irrelevant. Unfinished. There we go. Let me get some a little bit of water as well. What are common wave A targets? The 382 and the 0.5. The golden pocket is also possible. But it depends on the retracement. So if you're looking for a wave 1, 2, and your wave 2 is a zigzag, A, B, C, then your wave A commonly is between 3A2 and the golden pocket, right? So that's your range. You don't really want to see wave A move beyond the golden pocket. That's very deep. And then you get a B, and then your C moves below your A, of course, in that case. So for your C, you're looking for 05 golden pocket 786. If you're looking for a zigzag in a wave 4, then the 236 is always an interesting target for an A. Then you get B, and then C moves to like the 3A2. Well, I wanted to drink from the bottle. I better not do that. Okay, there we go. Are you the founder of Golden Pocket? No. Fibonacci. Mr. Fibonacci himself is the founder of the Golden Pocket. Yeah, 15K giveaway party coming soon indeed. Yo, giveaway, Mark. I got to think about that stuff now. Yeah. Also, the channel almost exists for 2 years on the 20th of February. So I think that's going to be more like the party day, right? So 20th of Feb is the 2-year existence of the YouTube channel. So I think that is of course a nice moment to do some giveaways, hoodies, shirts, memberships, that sort of stuff. You know. Okay. So locally, let's focus on the charts. We're almost finished here. So this was the highest probability scenario as explained this morning, as long as you do not touch the 0.618, right? So as you remember, for the ones that watched the morning update, we, of course, have always different options, but as mentioned, it all depends on this level. As long as you do not touch the 618, probabilities are higher for continuation down. Right, the 618 basically decides. If price would have moved up and touched the 618, then you're counting this as a 3-wave corrective structure. Right? But now, quite clearly, we can count it as at least 5-waver. So let me do this for now and remove the fibs and remove the polyline. Toggle on the volume. Okay. I might actually just do this for the sake of simplicity. So the numbers like the 1-2s, and it doesn't really matter per se. Like the more 1-2s you count, the more 4-5s you're gonna get. It's as simple as that. Now your wave 3, now there's 3 rules, right? Wave 2 is not allowed to take the origin of 1. Wave 3 is not allowed to be the shortest, and wave 1 and wave 4 are not allowed to overlap. Now wave 1 and 4, if you would put the low of 1 here, they don't overlap. 3 is longer than 1, and 2 doesn't take the low of 1. Alternatively, we can put the 1-2 here, and then we get to a count that Stuba showed in Discord. So for the ones that are in Discord, let me actually open Discord here, because then you will see it. Props also to Stuba. Stuba is a great Elliott wave analyst in the group, very active. And he this morning, oh, there we go. Let me put this out. Can I put it out of my screen, please? There we go. And you could count here a couple of 1-2s, and then of course you eventually move into a couple of 4-5s. Now, I like to keep things simple, right? Not make it too complicated. As long as price is moving down and we don't get any bullish range or a significant bounce, we just quite simply move to the downside. No? So price is moving down on an increased amount of volume. So from an Elliott wave point of view, you got to wait for a range to form, and the range will give you all of the information you need. Now you can see here that the highest amount of volume in this local trend down is in this structure to the downside. It is most common for an impulse to have the highest amount of volume in a wave 3, not in a wave 1, not in a wave 5, in a wave 3. So at the moment, with the current price action, we preferably count this structure as our wave 3. Now, if price continues to the downside, we move to 90K. We just closed a 1 hour candle below this support as well, interestingly. So quite simple. If price it cannot even move back above this support with some bullish signs, I'm not interested to go too long, man. Not at all. Oh, Discord booted up. Let me find the chart from Stuba real quick. Shout out to Stuba. There we go. So this was the count of Stuba. Shared it in Discord earlier, where he had a couple of 1-2s here on the chart, right? So a little bit more detail locally, right? A bit more complex, but in other words, you're just looking for 4-5, 4-5, 4-5 to lower prices, right? Basically a straight line to the downside, right? So I can definitely recommend checking Discord out. Lots of value stuff in there. So we have our 3 currently, highest volume in 3. Preferably, we then count that as our wave 3. And then we look for wave 4s and a wave 5. Now, quite simply, the reason why one of the tips that I always love to give is if price moves down on volume and you're not positioned, wait for a range to form, is the next range will give us all the information we need. If this next range is going to be corrective, meaning a 3-wave structure, we are looking for price to simply continue, just like what it did over here. In the silver updates, earlier today, I posted the following picture, which is this one and this one. Yes. So the previous range, the probabilities anyway were higher to move down as long as you don't touch the 618. But the moment you start working on a bit of a range or get a bounce, you can analyze the bounce. So this is from earlier today, right? Like this morning. Now, there's 3 things here that increase probabilities to move to the downside and take the low. Number 1, price retraced to the 0.236. Very rare target. So this is educational, okay? This is educational. Just in case we then create a new range. So this is what I look for. First of all, price retraced to the 0.236 and move back up. The 0.236 is very rare for a wave 2. If you want to change the trend, you need an impulse up, retracement back, preferably 2s, and then you move towards the upside. The 236, higher probability, this move is corrective, not impulsive. The moment you hit the 1.618 here, which is taken from this high to the low here at the 236, the 1.618 invalidates, pretty much invalidates, it significantly lowers probabilities, I should say, for a flat. So A, B, C for a deeper retracement instead of the 236, maybe an 05, 382 golden pocket was out the window the moment you hit the 1.618, right? So these two work hand in hand, both created lower probabilities. This was an impulse. And then later, price moved up over here. And the highest amount of volume in the local move to the upside here was in this candle. So in the high. Now, as explained, if you're looking for an impulse, most commonly the highest amount of volume is in a wave 3. Therefore, the ranges before are labeled as 2s. This would be your 3, and later you look for 4s and 5s. But the 0.618 acts as an invalidation for a 4. So the moment price here came down, touched the 0.618 here, which is taken from this red candle low here to the high, it pretty much invalidates your wave 4, right? We use it as an invalidation as it is from a probability standpoint. It's so rare. So it invalidates wave 4, increasing probabilities, again, that this bounce to the upside is corrective, not impulsive, meaning downside is more attractive than upside. Besides, we never hit the 0.618. So that is what we're going to be looking for when price is ranging. Now, on a 50-minute time frame, we can 1, 2, 3, 4, 5. We can count a 5-wave structure here to the downside, right? So the moment we get a bit of a bounce, the first thing we do is put 5 here. And then, of course, your 1 and 2 doesn't matter, right? Either you look for more 4, 5s or not. The next bounce, right, a next retracement, that's what's going to decide continuation down or a move up. Now, mind you, by the way, that if this is a 5-wave structure, you expect a 3 and another 5. So you're still looking for price to move towards the downside as the higher probability Elliott wave scenario on a 1-hour time frame. The moment you take out these lows, there is the potential for an expanding flat. Wave C in an expanding flat most commonly takes out the low of A. So if you just continue down in a straight line and you start bouncing from here, right, be aware of simply continuation. So in other words, just to make it clear, if price creates a bigger bounce before taking out the lows, probabilities are higher, you're coming back down later. If price continues to the downside in a straight line, takes out the lows and moves back up, probabilities are higher, right, to take out the high. So, or at least, yeah, they increase to take out the high because of the potential of a flat ABC. Now, I'm personally, from an Elliott wave point of view, it's the ugliest flat I've ever seen in my Elliott wave live. If this turns out to be a flat because of your wave B being very high, very long in time, like there's many things very awkward and very stupid with that wave B. So the probabilities for me are highest to look for corrective structures. If you get a 5, like still look for a bigger corrective structure. That's something that I would prefer to see from an Elliott wave point of view. But the next range gives you all of the clarity. So locally, we're looking for an impulse to the downside here, a 5-wave structure. The next bounce to the upside will give us all the clarity we need. Preferably price moves back above this support turned into resistance now, and if it does, there's at least the opportunity for a bit of a bigger bounce to the upside. We can of course count a 5-wave structure down now. No overlap between 1 and 4. 3 is longer than wave 1. 2 didn't take the origin of 1. So in other words, it is a valid impulse. The question now is how many 4s and 5s would you still get? Right? So I don't mind counting 2, 4, 5, and then eventually look for a bigger bounce. But the local price action needs to show strength, and at the moment we are below support. Which is now resistance, of course. I can remove this one. So that's basically what I am looking for locally. So the probabilities on the 1 hour, right, remain higher to continue this range. At the moment, the probabilities are not high to, if we get a bounce, to just go straight up and continue the trend, right? Because then you have a running flat. Besides the flat already being really ugly and low probabilities, a running flat is the rarest flat. You haven't taken these lows, this one, nor this one. So from an Elliott wave point of view, probabilities are higher to still continue this range unrelated to any of the local price action, but we can count a 5-wave structure. If we have a low and we can change market structure, some bullish CVDs, some volume coming into the upside, then this becomes your highest probability scenario, and you then count this as a wave A, a wave B, and a wave C. When C is finished, back up you go. Now, this bounce to the upside, as explained, depends on local structure. So the next range that we get, probably tomorrow morning when I wake up, we'll have a good idea of getting a bounce, bigger bounce or not. But that's what I'm looking for. So quite simply, waiting for a new range. We can count a 5-wave structure to the downside. Will we get another 4 or 5? Right? Okay, well, then we just add another 1, 2. That's no problem. It's going to be the same thing anyway. Eventually, we look for signs of strength. At the moment, though, we're below resistance. CVD, let's see if there's anything happening. So from a CVD perspective. Okay, that's... do we have 3... Wait 1 second here. So I think we have a couple of 886 touches locally now. Wow, what a crazy structure here. So price has touched the 886 And the fact that it did touch the 886 does improve the probabilities to, at a later stage, come back down and take out that low. But yeah, let's see if we can create a little bit of a bounce here. It's always interesting how we say, let's see if we can create a bit of a bounce. Like we decide what like we equals price plus us. But yeah, the 886s locally do increase probabilities to still take out this low at a later stage. So something to be aware of. And yeah, so if I summarize price action, so let's summarize this now. Let's summarize with the probabilities, and then tomorrow I'll come back with some new 1 hour polylines for all of you. On a weekly time frame, there we go. This is your summary. The probabilities are highest at the moment for yellow, with your alternative being green, but the short-term price action is the same. Based on this structure to the downside on the weekly, we will know what's going to happen next, right? This is going to be very important for probabilities for the bulls and the bears. Won't be difficult to analyze this when we get it. In both of the lines, we preferably still look for higher prices first, right? Before getting that retracement. On the daily time frame, the highest probability scenario was this one, which was also the polyline, which is this one. So that is the highest probability daily scenario. Now, mind you, this is just a straight line down, but a wave 4 can be any corrective structure. So of course we can have a zigzag, but this zigzag can turn into a bigger triangle, right? Zigzag can turn into a WXY. So it doesn't mean that after zigzag you're finished, right? But it's just a straight line, just for the sake of we're looking for 4 and 5. Okay, it's not like this shows the structure of what you're looking for. So yeah, on the daily, probabilities are highest to still look for upside, and these type of retracements are part of a bull market. And actually, they're very healthy. They're also really nice because the retracements gives opportunities. So of course, there's emotion in the market because people expect price to move up and up and up, and they don't necessarily take into account drops like these, which can be quite volatile, right? It can be scary as well. But if you have good risk management, you're level-headed, then by looking at the chart calmly, having a good plan, these type of moves are actually very enjoyable. Because first of all, you can trade them, which I did. Second, these type of moves will create great opportunities again for potential longs once price is stabilizing and probabilities are changing for price to take out the high, right? So I don't know about you, but I prefer to long somewhere down here instead of longing at the tippy top, no? I love ranges. I love ranges. I am most profitable in ranges, right? That's where I actually make my money. I do trade the breakouts because I position myself in the range, right? And this sort of stuff is awesome. Like probabilities here were higher to still move up, right? That's good. That's where I enter my positions, and then it's just risk management as price moves to the upside. So these type of moves gives great opportunities. Of course, if you lost money and this move to the downside, that's sad, right? I've been there myself. I know exactly how you're feeling, or maybe not sleeping. I've been there as well. But it also shows in that case there's not yet a sufficient plan, or you size too big, because that's usually what creates the emotion, is not having a plan or a strategy with a stop loss, take profit, how to manage the trade, and not having the psychology or I should say different, not sizing your trade correctly. And if you use too much size, it's going to play with your psychology. You're going to make mistakes. And it's going to be a very emotional roller coaster. And then on the 1 hour time frame, look, if we're very blunt, then on a 1 hour time frame, the probabilities are still higher to look for lower prices. Even if you do get a bounce up, at the moment, probabilities are higher to still move down at a later stage. If you take out these lows first and you go back up, there is the potential, at least for continuation, to take out the high and not a bigger three-way structure, right? Depends on the retracement up. At the moment, though, on the 1 hour, look, we're live. Price just stopped dumping a little bit. We're still hanging around that support, which now acts as resistance, right? There's literally zero signs of strength on the chart. There's nada going on, right? Price is moving down. At least with the latest drop, your volume is moving down. So it does show the potential for 5 price action, which is ending in impulse. But it doesn't mean the low is in. What I look for personally is a range to form, just like we did here. That will give me all the clarity that I need, which was, I explained what I looked at when price was forming here, right? I explained the story just now. That's some of the things that I keep an eye on. And based on the new range, which I will, of course, communicate then in content as well, we will be able to know the probabilities for up or downside, because it's all probabilities. But on the 1 hour time frame, potential for a finished 5 and for price to create a bit of a bigger bounce, a bigger corrective structure. That's definitely something I'd be looking for if we do get at least some proper, not this mess here, right? But actually some good price action, flipping resistance into support, some bullish CVDs. So just waiting for a range to form. I'm not someone that snipes the low or the high. I don't need to, right? I try to take the sandwich in the middle, right? I try to eat the ham, not the bread. So I am not in a long here, FYI. But everyone has their own plan, and some people will be very happy to long because it fits their plan. But it's not mine. I'm very patient. I'm a very patient trader. So yeah, let's wait and see. Potential of a finished 5er. And if we do move down, we just add another 4 or 5, and then we just look for a bounce here. Simple as that. So the range gives the next probabilities. Yes. So hopefully you're doing good, everyone. Let's put you guys on the chart here. By the way, guys, I got an email from Bob Prechter. Believe it or not, it's true. So Prechter himself, founder of Elliott Wave International, founded in 1979, author of the Elliott Wave Principle. We got in touch. So just before going live, I had dinner with my wife. I opened my phone and I got an email. Now, the thing is that Mr. Prechter is... that was my alarm. So Prechter is interested. I keep you guys up to date, of course. So Prechter is actually very interested to meet up. Now, in my case, I would prefer an offline meeting instead of online. It's more personal. I like it. He lives in America, and I can, take my wife with, and we go for a bit of a trip, and we can have a real live interview conversation. It's not necessarily that I don't want to. So I also wrote him, like, it's not necessarily that I don't want to make content for the content. I don't want to use Bob Prechter, like the guy himself, for content. I'm just really interested and inspired by his line of work, and I want to have a conversation. If I'm allowed, when I'm there in real life, to film it, obviously I will. And I can ask some questions from the community as well. So I will then ask you. So we're still planning and talking. But then I will make sure to ask you guys questions about what would you like to ask Prechter himself. Now we will then do a voting of the questions, and then the top 5 highest voted questions are the ones that I will ask to him, right? And he lives in America. Now I'm living in France, so then my ass goes to America, be there for a couple of weeks while we travel around. We meet up with Prechter. My plan is to also visit Elliott Wave International. Now, even though we are both content creators in a way, I'm not a vlogger, so I don't really know how how I'm going to do that stuff and kind of bring you along. I will, of course, on Instagram. I don't yet have a date. I don't yet have a plan. I don't yet have the flights booked and all that stuff. But the only thing I know is he's willing to meet. He did say that in order to save me the effort of flying there to where he lives, he is perfectly fine doing an interview through Zoom or through Teams, or make content for the YouTube channel, do an interview for the YouTube channel, like through webcam contact. But if it is up to me, I want to meet the guy when he's alive and shake his hand, not his virtual hand. I want to look him face to face. That's a lot more worth to me personally, because he has played a very big role in my career because of Elliott Waves. Right? So for me, it's much more interesting. I no, not interesting. I would be a lot more. I would feel a lot happier if I'm able to meet him before one day, of course, he passes away. You know, what a legend. So just so you know, we're in touch. The man himself emailed me when I was at dinner tonight. And I will keep you guys up to date with the following live streams. And if I have any updates to share, I'll make sure to share it with you so that you know what's going on. If things are eventually booked and it's actually possible to visit him in real life, because he did also suggest online, so that I don't have to travel. So he thought about me, but I'm like, actually want to travel. I want to go there. I'll take my wife with, make a little bit of a holiday. So if that's possible, I'll ask you guys for questions. We're going to do a voting. Top 5 questions will be asked, and then I'll do a bit of an interview. And in some way, shape, or form, we might be able to record that. It's not necessarily the priority, but it would be nice with our phone or whatever. So just so you know. There you go. Very nice. So, yeah. There we go. A lot of writing here, of course. If you have a question that was asked earlier, make sure to ask it now again. TP, I know Trade Devils, yeah. I'm familiar with them. That he thought Bitcoin had many running flats. So running flats are more common in bull runs, right? And that's because of the strength. It actually makes sense, right? However, an expanding flat is still your most common flat. Your running flat remains the rarest flat structure out of the 3, but in a strong bull environment, a running flat increases in probabilities. It doesn't beat probabilities of an expanding or a regular flat, but they do appear more often, quote unquote, often, of course, because of the strength in the market. So your C does not have the strength to move down all the time or so far, because of so many people buying. So it doesn't get down. It doesn't take the liquidity. But it's still a rare structure. So, but you got to be aware of them. Yeah, especially in bull markets. Same, by the way, in bear markets, the other way around. So in a trending market, that's the better word. In a trending market, a running flat appears more often. It remains the rarest one, but it's still more often. Freshly shaved man. I know, guys. I'm 32 years old, okay? 32. I shaved my beard yesterday. The community went wild when I opened my webcam full screen and be like, ta-da, gone. I know. Won't happen again. Okay. Are we at the daily level as well here? Yes, that's one of the 2 supports in this box. Yeah. Were the ones I made based on my own counts or emotions of other traders. Yeah, you know, you don't be reliant on others, right? It's that's a pain as well. In the end, you always want to have your own strat, your own count. Please invite him for an interview on the channel. In real life would be even nice, you know. Yeah, absolutely, Shirley. Yeah. And it would be great because maybe a Band-Aid lives in Florida. And it so happens that the headquarters of Elliott Waves International is in Georgia. So if my wife and I can do a bit of a holiday that starts in Miami and ends in New York, hey, I can also meet maybe a Band-Aid. Yo, I have this zipper, man, and this zipper is like locked in like, oh, there we go, sideways position. There we go. Ask him when Lambo. Yeah, I will, if that's the highest voted. Mool. Actually, it works, but it's some kind of psychology or statistics. I do not find any math. So Mool, you would need to, so there's two things you can check. First of all, the work of Nelson Elliott himself, right? The founder of Elliott Waves. So you can, of course, Google that. And second, in Discord, if you talk more about statistics, right? Then 1 second here. You go to Discord. And then if you scroll down, so when you open Discord, of course, you will see all of these channels, right? And then you scroll down. And then here you have Elliott Waves. You can download these two PDFs. This is, I don't know, like a decade-long research from Rich Swannell, a great Elliott Wave analyst. And he actually collected an insane amount of data about waves and the percentages, like probabilities of them forming, like a zigzag in a wave or a diagonal in a wave A of a zigzag only appears in 7% of the cases, right? So for more detail about statistics, check out these two documents. TP, did you reach out to him first or did he reach out to you first? I reached out to him first. I didn't really expect him to reply, but he replied in only a few hours because I sent the email later today, and he replied in person. So that's really cool. So of course he wrote the email and. Like I wrote an email with what I do and the channel, but you know he answered and he I can't go in detail, but it's a nice it's a great response. Yeah, so we're in touch. He knows I'm alive. He has seen what we do. So and that's really cool. So I never expected when I started this whole Elliott Wave journey, of course, many years ago, that I'd be in touch with the guy himself, and yeah, how nice. Bucket list shit, exactly. Ooh, this we goes pop. Gold. Take some books with. Have them sign maybe some special editions for staff. Wink, wink. Yeah. Odin, I can then take one back to South Africa, and I'll be meeting you. Give you a book. Yeah, I should then just buy like 10 or 20 books and bring them in my suitcase, and then have him sign them. Yeah, to the live stream. Yes, that would be maybe like a part 2. I would always try like meeting offline. That would be like the thing, you know. And then a meeting 2.0 could be like a live stream meeting or something. Bitcoin dominance, found resistance, hit an order block. The Bitcoin dominance chart went like this, right? So this is not good. We hit an order block as resistance here. And we are retracing, which is also what we like to see, right, on Bitcoin dominance. Still looking for higher eventually, though, on the Bitcoin dominance, but short-term corrective. I am Dutch, but I live in the south of France. Yeah, I moved in August this year with my wife, and I also have a wife since this year, after 6.5 years. But Merry Christmas, keep up the good work. Dr. Wolf. Now that has been some time, hey? Awesome to hear from you. So Dr. Wolf, everyone, he's a scalper. Uses CVD on the lower, like on the lower time frames. And was a guy like, or maybe still is, of course, but in Dr. Wolf was very active in Telegram. Not so much in Discord, right? But very, very much so on Telegram. And thanks for writing a message. Great to see you're still hanging out, and also happy to hear that you had an epic series of trades along my vision. Of course, all trades are your own. He has a very good strategy, very effective way of trading on the lower time frames. So I follow in the shadow. Thanks for popping in, and Merry Christmas, Dr. Wolfman. Merry Christmas. Have a good couple of weeks spending time with family and friends. I will be in the Netherlands, but I will take my setup with me. I won't be as advanced as I have here, but I will take my mic, my laptops and everything with me so that I can still live stream, mainly streams when I'm in the Netherlands during the holiday period. Victor. Oh, wait, Shirley. What concerns me is a major alt like Sol almost hit the 618 down, and based on the current wave down, it seems like it can hit it, which threatens its bull market impulse. That's correct. In that case, it can be very interesting, of course, to do an alt stream soon. Also, it would be interesting to check if Solana, in that case, is creating a higher degree 4. So you can have a bigger retracement, but if it's 1, 2, 1, 2, 3, 4, 5, 4, if this 4 retraces to the 618, so I don't know Solana out of my head. I'm not too sure. But of course you have a 618, which is now pulled from this to this, right? So it's not relevant for this wave 4. We need to take it from this low to that high, which creates more space because your 618 is now going to move to the downside. It's lower. So we would need to check if it hit the lower 618 as well, if it creates multiple 4-5s. But if it does touch that 618, then yes, then the impulse to the upside is definitely under risk. The moment you hit the 618, you're either looking for a multi-1-2, which is of course your bullish scenario. Alternatively, your move to the upside is counted as a corrective structure, right? And you're not yet done with the bigger range. That's just out of my head. I kind of know where we are because on Solana, the probabilities remain higher to take out all-time high. So you touch the 886, Victor, welcome. Good evening, everyone. How do you find all the levels and the boxes that you have? The boxes are a combination of volume levels, time frame horizontal levels, order blocks, Fibonacci. So that's how my target boxes appear. Now I made a video about this. 1 second. Where's my Linktree? Here it is. So Linktree is in the description in case you want to have like the whole thing. And then you go to educational content. 1 second here. Oh wait, I think I logged out of. Oh no, I'm still logged in. Okay. So here I don't know why it's white though. I think I removed my cookies earlier today, so that's why I need to change my settings again. But you go to the this playlist, and then there is a video here where I talk about the easiest way to trade. It's not the greatest title. I might actually change it, but this is about target boxes. So this is the video you want to watch. I use volume profiles. I use daily, weekly, monthly levels. So this will give you, these two are a big part of the boxes. And then of course I use Fibonacci, for the boxes. I don't use channels for the boxes, but they do play an important role in counting Elliott waves. So thanks, Victor. Appreciate it, man. Maybe when I might have to come down and catch dinner with you. Of course, man. Dude, if I come down there, then we'll meet. We'll find a way. I'll be able to come there. US round trip is an awesome experience. Just did one this year. Yeah. Where did you go, Ice Cubes lady? I've done one before, but that was on the West Coast. So my wife and I got engaged in Monterey, Carmel by the Sea, south of San Francisco, when I was there to speak. So for the ones that do not know me, I'm also a global keynote speaker. And I had to speak in Pebble Beach. As we are chatting, by the way. When did we start the analysis? We started at like 28 min or something, no? I don't know. So I had to speak in Pebble Beach for Capgemini, and that's where I went on one knee. But then we also had a holiday, so we went south to LA and Vegas. That was 2022. Yes, 2022, October. So yeah, it would be great to do the other side of the US. But I'm curious to hear where you went. Can Elliott is programmed? I guess there is a way to program it. But I have yet to see a successful implementation of that. There is no indicator on TradingView that is good in Elliott wave counting. None. I very much do not recommend using Elliott wave indicators. They're very wrong. So it's if you study Elliott waves for a week, you'll be better than any indicator on TradingView. I have not seen a good indicator on TradingView yet. Roman, also living in Miami. Huh? Yeah, look, there's quite a lot of people from the US that follow the channel. Do you think uncommon structures like diagonals appear more on the low time frame? All of the structures appear more on lower time frames, but that's also because the lower time frames, you have a lot more opportunity to have them form, right? So on a weekly time frame, before you talk about an uncommon structure, it's going to take, on a weekly, it's going to take months or years. But on a 15-minute, you can develop a structure like that in a couple of hours. So naturally, the lower you go, the higher the frequency of these type of structures. But in a data set, right, if you then look at only the 15-minute and you check all of the impulses versus diagonals, all of the triangles versus expanding triangles, all of the, then the probabilities, even on those time frames, are still low for these structures to form. It's just that they appear quote unquote more often because the 50-minute simply forms more structures because it's a shorter time frame. There's also a webpage I read today, and they mentioned combination Elliott wave with Fib, fractals, MA. Have you ever tried any of these additional tools? Yes, but not necessarily in line with Elliott waves. So when I started, I tried some moving averages, MACD, RSI. I know the RSI is quite popular for Elliott wave analysts, but not for me. Like CVD that's my thing. That's my baby, And of course, I use Fibonacci. You like Elliott waves and Fibonacci go hand in hand. Fractals are important because price action doesn't repeat, but it rhymes. So using fractals, right? Like Elliott waves is fractal by nature. What happens on a weekly, right? Happens on a 1 hour, happens on a 15-minute. The moving averages, though, I never really got into that. Neither with MACD. So I've never tested them in combination with Elliott waves. Can imagine MACD, though, might show a divergence between a wave 3 and a wave 5. Yeah. I have my own set of tools in combination with Elliott waves. So beautiful weather, 25 degrees. Oh, a little bit warmer than it is here in the south of France. I gotta say, we had a great day today. But Giannis, thank you, man. Thank you, guys. A user here could be Prechter right now. Imagine. Well, look. The moment this man, this legend, like such a great inspiration, if he would join the live stream, he's an instant mod. Like I gift him diamond or something, like instant mod status. Like no worries. Let him sign your compendium. Now that's an idea, Desik. Oh, by the way, talking about the compendium, it's not gonna happen before the end of the year. I had a meeting today with a lawyer because. Of course, if you're going to publish stuff like the compendium, which is going to be incredible for like the Elliott wave space, is so much detail, so much information, which is it's not yet found in a book this amount of detail, that we need to do it in the right way. So we need also terms and conditions. We need certain trademarks, certain things. So the lawyer is going to get to work. She is gonna send me an email tomorrow. I get in touch with a few others, check what's up, and make a decision. But the Elliott Wave PDF. So that's the compendium. So basically, in a nutshell, the Elliott Wave compendium is almost like a summary of Elliott Waves plus, of course, my knowledge with regards to time, volume, fib time, what's common, what's rare, a probabilities table, channels. The 886 has separate pages, common retracement levels, rare, uncommon, targets, Fibonacci extension, retracement, a bit about Nelson Elliott, like this, and more. There's so much information. It's already over 50 pages. The compendium is over 50 A4 pages, and it's full of graphs and designs and like charting, basically, right? So a book, of course, is very theoretical, right? Has a lot of text. A compendium is more focused on providing all of the information in the most concise and compact way possible, which is what I like. So all of the info about every Elliott wave structure, including a multi one too, because that's of course the one that we have here on the channel as well. All of the information about the structure, and I'm not talking about an impulse is 5 waves. No, retracement. Wait, let me actually. Do I have it open? No, I don't have it open here. No, it's the retracement targets. What's common, what's rare. We created a whole star rating system. We have retracement targets, the extension targets, the volume, the structures in the subwaves, the time, the rules, the guidelines. Fib time, I don't know if I already mentioned it, where a structure is positioned in the bigger scheme of things. And I think a few things, that's all on one page per structure. Every structure has all of that information. Plus then, of course, theory about Fibonacci, how to pull it, the 886, channels, what else do we have in there? I don't know, other stuff. I don't know the whole thing out of my head, but it's big. It's big. So we're gonna of course put it online as a PDF or Amazon Kindle or whatever, like a downloadable thing. But I also want to make it a book. After that, I'm then looking to create my a publishing company, and then publish the compendium as a physical book. Now that would be awesome. And then take the book to Proctor and then make him sign it. Phew. That would be a moment. Missing the cold temperatures? Not at all. What 2 questions are you? You should become friends. I mean, what equals friend? I'm very happy to have the opportunity to speak and likely meet him. So. And I just want to have the opportunity to talk with him at least once in his lifetime, and my lifetime. Hopefully, I outlive him, of course, in a way. But he's such an inspiration, right? From like as a person, businessman, and of course as an analyst. So I think there's a lot to learn for me as well on how he has approached certain things in his career. Such a wealth of knowledge, of course. Like I really look forward to like meeting him. Instead of only virtual, I would love to actually shake his hand. That would be amazing. He has meant a lot, of course, in my career as an analyst. What 2 questions at the moment are you most interested to ask him? I haven't thought about it yet at all, to be honest. I don't really look to have an interview per se. I want to have more of a conversation. So of course, if I meet him, I will prepare. But I don't want it to be really an interview type of style. I prefer to have more of a conversational style. Now, I used to be a host on television. And as a host on TV, I was a host on Fox Sports, which eventually was ESPN in the Netherlands later, the show that we ran. As a host, I had a table with it was an esports show, so I had 2 analysts and then sometimes players popping in and whatever. And of course I have questions, but it's a conversational show, right? So you use answers again for new questions, etc. So there's a couple of, I suppose, topics or general lines that you want to talk about, but then you just let it go, right? Let it flow. So I don't really have any questions yet. We would first need to plan and that sort of stuff. That is probably gonna be spoken about, yes. Of course, with what he has invented in the Elliott wave space, what I have found and inventing, well, we're still working on it, but of course the compendium will provide all the info about the 886 together with sketches, information, what's rare, common, most common, that sort of stuff. So that's something, of course, we found. And, Kennedy found the channel technique. Rich Swennell collected all the data. And I definitely do not compare myself with any of them. They're absolute legends in the space. But maybe one day we will be able to join such a special list of people that meant a lot to the space. That's definitely a great goal to have. My eyes. Keita. Jan, it's the first link in the description. You can download the template in Discord. If you open the description, first link should be something like free Elliott Wave template, Discord button, and then you just click on the Discord button. If you just made a new account, by the way, you won't be able to enter. Or if you made a new account a week ago and you try to click, you still won't be able to enter, because you first need to write me a message or a comment, and then I can unban you, because we have protection against scammers. Of course, we want to keep everyone scam free, because at least my comment section on YouTube is incredibly clean, right? We're very sharp. So very rarely do you see any scammers on YouTube, but in Discord and other places, it's a mess, right? It's Discord's thing is protection it really sucks there. Yo, trade safe, no joke. Ramad, weekly remains bullish. Daily wave 4 still looking for 5. 1 hour time frame. We are looking for, so the 1 hour probability is high to continue the range. And if this is a low and we create a bigger bounce, probabilities are higher to still come back down later to take out these lows here. But we're basically waiting for a bounce and a range to form to get a better idea of probabilities of getting a bigger bounce, of getting a smaller one and move down. So we can count, second question here, Jan, we can count a 5-wave structure down. So there's at least the potential of a finished impulse, but we need a bit more price action to really gauge the probabilities of a bigger bounce. And even if you do move up, probabilities would still be higher to come back down after instead of continuation. Because if you do continue, then all of this turns into a running flat. But a running flat is very, very rare, especially with a B that is this high. So 382 to the 886, correct. Most common 05786. How about using... I've never heard about this Martin W. I mean, Bison Network. Interesting. Okay. Okay, Python. Okay. That can be used to build models from data and or expert opinion. Yo, this is interesting. Do you have experience with this? Could you, if you have, right? Because it seems like you know something about this. Do you think there is a way that the PDF, the compendium we are creating, and the knowledge I have with the decision making that I use myself on Elliott waves, do you think we can program that in this? Because if we can, it could be very interesting to see how we could build something like this in 2025. Because of course, as I am analyzing the chart, you guys see you don't see, of course, what's happening in here, right? Like how, of course, I try to say as much as I can with how probabilities change with certain levels being touched and la-di-la-di-la. But if we can create a model based on my decision making, just like an Elliott wave tree, which is, by the way, something we're going to create as well, like a decision tree. It's for the future. We're not yet working on it, but it's a fun idea. But like a decision tree can be put into some sort of a code, which can then be turned into possibly creating actually a good indicator on Elliott waves instead of the sucky ones that are out there now. But I can imagine it's very difficult, because if it was easy, there was already going to be a good indicator out there, but there isn't. So just wonder what's the chance of actually making it happen. But I'm definitely open to exploring this idea. Yeah. I heard a liar. Lawyer. Yeah, lawyer. Yo, Martin, can you send me a DM on Discord or somewhere? Like, I'm very, I'm intrigued. I'm intrigued. Interesting. Yes, I agree, Ice Cubes Lady. It should be. I know. That's going to be the next step. First the downloadable one and then the hardcover one. Yo, Ganam, how you doing, man? Welcome back. I messed up my schedule. Now going to work is never preferred unless everything else fails. You should wear a shirt with a quote like that. Ganam, go to bed, man. Call it a day. I gotta go as well. 8 minutes and then it's 11 p.m. I want to watch an episode of Outlander with my wife. So surely I would bid for a compendium signed by both you and Prechter. That would mark as a memorabilia of the launchpad for most of our journeys here on chat into the Elliott wave world. Yeah, wow. In that case, surely I do like your idea. Actually, I need to have a physical compendium edition before I meet up with Prechter in that case, and then have a couple of his books and a couple of my books, and then sign both. Now that's peak limited edition stuff. Yeah, that would be insane. Yeah, I like your idea. I like your thinking, Shirley. That's a good one. Nice that you mentioned it. And yeah, keep you in mind. I'll keep you in mind. I'll never forget these type of sentences. Do you have a cycle top target? Yes. The target. Cycle top target. So first of all, the first one is really big, right? So that's 81K to 176K. And yeah, it'd be like, yeah, what the fuck? How do you call that a target? Okay, well, you can make it a bit smaller. 80K to 130K for at least your first structure up is your highest probability target. 176 is quite simply the highest target at the moment as a cycle top. But 120 to 180, 120, 150, that's like, yeah. So on a monthly time frame, you can see it in my monthly analysis, a playlist on YouTube, macro and high time frame analysis. The recent live stream, just check that one out. Or the recent video. Yo, cheers, Douwe. Thanks for popping in, man, and being here. Shake hands with Tibetan monk. Yeah, I'll be happy to have a drink with you and shake some hands as well. What country are you from? Where do you stay? Tell us his name again. Are you talking about Prechter? Like the author, Ahmed, the author of Elliott Wave, the Elliott Wave Principle? Founder of Elliott Wave International, Bob Prechter, BP. Sorry, Kun, am I correct that we are looking for new 5 structure up? A corrective structure. Doesn't necessarily have to be a 5, but you preferably start with a 5. Yes. So the local range, which is still very young, right? That this is important. So if you get a 5, then you look for a retracement and another move up. And this has the potential of becoming, of course, a bigger 5. Or you create a zigzag, but the zigzag is often a launch pad of bigger corrective structures. Now the question is, will it be corrective or impulsive? If corrective, you still look for price to take out the lows on the short term. So you do have a couple of 886 touches at the low. It's not ideal. If you count a 5 wave, which is possible, and you get a bigger retracement, you still look for price to come down later. That's your highest probability. Probabilities are not highest you continue because a running flat is very rare. But the bounce to the upside then decides. But it's all about local price action here. This is what matters now, so I don't want to jump into too early. So we have a couple of 886 touches at the low, which of course doesn't really help. Bearish CVD is there invalidated. 1 second here. A bit of bullish CVDs here. But yeah, I'll see tomorrow. Tomorrow I wake up and we'll see where price is. Where's the list of forbidden words? It's in Discord. It's in Discord. On the channels on the left, under the welcome section. How important is the CVD divergence on the 1 hour? Preferably, so any CVD divergences with the lows here for me are irrelevant. The most important CVDs now are locally here. And that is because price has been moving down impulsively with a high amount of volume. So these CVDs are most important. If you now, on a 1 hour, right, have bullish CVDs, but on a 15-minute, you create bearish CVDs with every bounce, these have priority and have a higher probability of playing out, and price just continues to eventually invalidate the bullish CVD. That is what happened with the impulse to the upside here. 1 second. So very, very nice impulse move up. 1, 2, 1, 2, 3, 4, 5, 4, 5. Beauty, right? Beauty from an Elliott wave point of view. And then price moved down here. Now remember, you had bullish CVDs here, but locally on a 15-minute and 1 hour time frame, every bounce, every single bounce that we had here was met with bearish CVD divergences. And eventually we took the low. So keep an eye on the 15. That's the 15. 3-minute is very low. Like I like the 15 the most, and then 3-minute for local reactions, but 15 is my favorite. Yeah. What are the targets for the bounce if the low would be in? You take a fib from the high to the low in that case, and you toggle on the 0.382 to the 886, and your most common target is the 05 to the 786. So this would be your target area, commonly 102 to 105.6, right? Uncommon 382, very rare is the 886. That's your target area, and this is how you pull it on the chart. And then, of course, we also have support and resistance in that area, right? Daily naked point of control. I have an alarm here on the daily naked point of control because it's interesting. But I can imagine that if this day is going to end, or when this day is going to end, that we probably have a new daily naked point of control somewhere here around the 100K, I can imagine. Depends on if overnight when I'm asleep, it only has 2 hours. If in 2 hours you come up here, then you won't have a naked point of control. But I think when I wake up tomorrow, we might still have and get a new point of control there. Pleasure, Reloads. Cheers, man. Thanks, dude. Thanks for popping in as well. Appreciate it, man. EMT, one of the best projects. I don't know it, actually. PineScript will do it for you. I see. I'm interested to learn more about that. Yo, Alexander, welcome, man. And always a pleasure. Always a pleasure. Ryan, you actually follow Frost and Practice guidelines and rules, unlike... yes, I'm very rule-based. I don't actually watch other analysts, and the reason is that I don't want to cloud my judgment because I trust myself the most with my knowledge and experience, and I don't want to doubt because I see other things. So I actually don't really know what's happening in other places. Of course, I have been there. I have watched a lot of content on other channels before I started my own and in my learning journey. But yes, this channel is very much built upon sticking to the rules and the guidelines as they are. And I 100% follow the rules and the guidelines, plus then also add my tweaks and insights, of course. My wife and I love you and your oracle. India. Okay, India. Gotta visit India. Or if you're in Europe, make sure to pop in as well. But the oracle is already in bed, ready to watch an episode. From Vietnam, welcome Tin An Tran. Welcome from Vietnam. Such a global audience, global community. Welcome everyone. And thanks for popping in. A friend of mine, together with his now wifey to be, but at that moment in time was his girlfriend, actually backpacked through Vietnam. They had a crazy shower there, a crazy like a rainstorm. And they also drove, I believe they drive on the other side of the road compared to the Netherlands. And I think his girlfriend, when they were on the scooter, she drove into the wrong side because, when you just switch sides, like you're not experienced yet, you tend to forget at times, especially crossings and stuff. Some analysts use the whole chart to analyze waves from 2015 until this cycle. Is that doable? In that case, you want to use since the origin. If you go back to 2015, you have to actually go back all the way to 2010. What was it? 2010, 2011. And that is doable. Yes, you can use Elliott waves on any time frame. On where Martin is coming up with automate trade seller with highest probability, Elliott. That's why I'm eagerly waiting for Compendium 2. Surely. Do you know a little bit about coding as well? Right? Is that part of your expertise? Forbidding is missing, Scotty. What's up, Da? Have a nice sleep. Thanks, Murat. Thanks. But my journey may be a bit different in tech and AI than me. I mean, in a way, I guess there's always someone better or new or more modern or innovative but like what you have to offer and the skill set you have may already be enough. You're also part of the community, so who knows? Maybe maybe we can create like a little development type of team and then try to work it out. Jan, how you doing? But this is the most important. When do you enter your trade best? Start of wave 5, end of wave C, when to enter best. I'll show you some of my recent trades on the chart. Now, my trades are not specifically trading only wave Cs or only wave 3s or, that sort of stuff. But, that makes me remember. Wait. I got an absolute classic short. When I talk about positions, wait. Let me check this one. I'll get to your question about some of the recent trades, but I posted a short a long time ago, and in that short, I had 2 long positions from like 16 and 17K, and it was something with 100K. One second, I gotta be able to find this. On road to 100K. When was this? Oh, yeah. Wait. Oh, here it is. Oh, wait, it opens in the wrong tab. 1 second. So the sound is not important. Wait. I'm hearing myself twice. Okay, let me actually turn this on. we're looking at a WXYXZ scenario, which is rare, but it is possible in a wave 4 as a complex correction. It bounced perfectly on the 0.5 pip taken from the low of 2 to the high of 3, and the weak low of this wave 4 was also made on the 0.618 pip time taken from the low of 2 to the high of 3 as well. If we then open the volume, you can see that we also had a volume peak at the lows of this wave 4, which can signal a reversal area for eventually more upside. We're looking at a WXYXZ scenario, which is rare, but it is beauty. Here you can see the trade things on the chart here. This short, by the way, was launched. When was this? Can I see it here somewhere? 1 year ago. Yeah, but okay. Do I have a date somewhere? Can I find the date? I don't know. But you can probably see price was here at, I guess, 25-ish K. I can't see exactly, but you get the idea. So anyway, that's just a fun thing to show. Cool. Some of the recent trades, right, on the higher time frame. So I do like swing trading. So higher time frame, right? By the way, I also had a day trade here, but the moment price moved up here, that is the moment where I entered along here. Sorry. I also had 2 entries here, by the way. And then I closed because I was going to get married. So I closed here. And that was nice because a month later I came back and price didn't move. So that was actually a nice one. These are swings, by the way. Also in this range, probabilities were higher to continue. So it's the ranges, right? The ranges, they give me the probabilities, no? They give me the probabilities. Now with regards to the recent range, so we made this low on, guess what? Just like the short just now, high amount of volume. So I was definitely looking to move up, but I didn't like this structure. So I didn't actually long when this was going on, but I did when price came back down here and then made this a 3-wave structure with bullish CVDs, and then it was bull, bull, bull. So of course I then had more entries for price moving up, right? And then if we zoom in a little bit, let's go to the most recent range, I suppose. So price here, 3-wave structure to the downside, touches the 618 taken from the high to the low. Probabilities are now, and highest volume in the recent move down, signaling corrective structure, highest probabilities to take the high. Wait for a range to form, entry in the range, take out the high. That was the goal. Locally, it's literally just the probabilities. Price moves down, higher probability. This is a 3-wave structure to the downside. It's almost the same, right? Price touches the 618 taken from the high to the low, invalidating a wave 4. Any range afterwards, probabilities are higher to take the high. So the range is an opportunity to long in that case. I'm a little sad because I actually had a long here, but I closed it in this range. I mean, okay. But then I based on this range on the lower time frames, let's go to the 1 hour. So I shorted here. If you remember the polylines in the video, so you can go to the video on the 12th of December. I made a video where we touched the 886 here. So probabilities were higher for price to take out the double top. But this long it's not interesting to me from an RR perspective. But after taking out this high, 3 out of 3 polylines that took out the high were looking for a move to the downside. So I was always going to short this. So I shorted this one. And as price then moved towards the upside, I was a bit hesitant here. Like, are we going to move down? Because this was a 382 retracement, which is shallow for a 2. So as price moved up here, this move up was very corrective. I explained in another live stream how I shorted this high. And I took a TP1, but I actually wanted price to take the low. So that was a bit meh because I was looking for the potential of a 3-waver because it was so shallow. But even though that didn't play out, it's still a winner. So, that's what it's about, I suppose. And then price moved up, touched the 886, taken from the high to the low. So, of course, it increases probabilities to take out that high. And then we moved to the downside here. And then we take out this high. So I didn't actually enter long yet. Then we took out this high. And that was the moment where I was, okay, now I long. So that's where I re-entered a position. And then, of course, price, we moved to the upside. And yeah, here we are. I actually missed a short here. So I wasn't willing to short at the tippy top here. We were looking for a retracement, but I do like a little bit of a sign of weakness. And at this moment in time, we were still moving up, up, up. And there was the potential here for a flat. And then overnight, we had bearish CVDs here, but I was asleep. So I couldn't actually enter a position there. But I did eventually enter my short. I had one today because of, as explained earlier, and the stop loss was the 618, right? Because the 618 was the invalidation. Oh, if you touch the 618, you're going to count a 3 waiver, and then the impulse idea is out of the window. Now this move up, as explained in a bit more detail in the live stream, the move up, higher probability to be corrective because of what I explained earlier in the live stream, like these two pictures, right? So that is why I was interested to look for a short. And we're still doing fine. So as you can see, it's not like only C's, only A's, only 3's, I trade literally anything. It's just probabilities. And then, of course, you do want to have at least a bit of a decent potential RR. So you don't want to stop that's way like out of line, right? So with the 618, I think, where did we pull it from? I think like this, something like this, no? I don't know, my entry 618. And then looking for the low, that's already pretty much 1 to 2. But my support, the first support below this low was my box, right? And that's already 1 to 2.5. Ah, perfect, right? So, yeah. Hopefully it answers a bit of like the process, I suppose. Oh, your microphone picks up the video too. So, so you hear it twice. Okay, I see. Okay, I get it. Thanks, Odin. How do you get the weekly naked point of control? Through Atas. Template is in Discord. You can get the weekly naked point of control using different methods. You can go to the video volume profile where I explain it in more detail. This is in the educational playlist. Link in the description, the Linktree. Scroll down, educational content playlist. That is where you'll find it. And then the Atas template can be found in the Good to Know channel in Discord. And then here it is. Guys, I gotta get to bed though, or actually watch a series of Outlander. So, yo, what's up, WXYZ? Was one of the trades of the years for me, and so it is. That was an amazing. Deserved maybe a band-aid because you broke your whole sleeping schedule just to try and get that long. No? Do we have 5 waves up? 1 minute, I don't count the one. I just wait for the 15-minute to show me a bit more information. From India, welcome, Abdul. What's up, Mr. Friends, man? How you doing? Okay, everyone. Look, it's time for me to go. Hopefully you enjoyed the live stream. Hopefully I was able to guide you through the recent price action from an Elliott wave point of view on the weekly, daily, and the 1 hour time frame. Explaining what I'm looking for, just explained just now some of my recent trades and also some of the old ones, of course. Maybe it provides some insight into trading Elliott waves or stuff that I'm looking for. So summary is on the weekly time frame, remaining bullish, right? There's nothing like these are retracements that are absolutely normal. Of course, there can be some panic, emotion, over leveraged people getting liquidated and all of that stuff, but the main mistake is not having a good plan or good risk management. And then number 2, of course, psychology. So trade safe, have a plan, right? Have a stop loss, know how much you're going to lose if you lose the trade. I don't think you're going to win the trade. Calculate your position size on your loss, not on your potential winner. That's an important one. And train your psychology. And then these type of moves are actually very enjoyable to trade if you are not oversized, over leveraged, have the risk, but that's just practice and experience, I suppose, as well. Yeah, I know maybe a Band-Aid, I saw over $1 billion in liquidations, but I mean, it's the liquidations, of course, is the have no plan, high emotion, over leveraged, only expecting price to go up, up, up. And then here we are on the channel looking for a move down on the daily. Remember the 2 blue lines, higher probabilities for a wave 4 retracement. It's literally, it was out there. So yeah, we're not complaining. Don't shave the beard again. Ghana, man, I know. Look, there's still a little bit, going online in the evening, more people are able to join at this time slot. I also think it's the volatility that brings people here. I do agree maybe the evenings are better, but I also want to spend time with my wife. If I'm live every evening, it's difficult to sometimes chill with her, right? But I'll consider it. Of course, when it's evening, like, so for the Netherlands, everyone stopped working. The US, of course, is at work. So there's always one area in the world where people are working, right? So I can make it a bit tricky to find the perfect moment. Maybe I have to do a poll, and then based on the poll, we can make a bit of a plan. So thank you, Alfonso. We'll try to make it happen. Glad to stumble upon advanced Elliott waves practice. Cheers, Lucky Deal. Yeah, thanks for popping in, and happy to hear you like the advanced technical stuff here. So, okay, what's up, Mr. Brownback? It's time for me to say goodbye. Have a good night. Have a good morning. If you're on the Asian side of the world, good afternoon, evening, wherever you live. Tomorrow, Friday, we will be live again. There will be a morning update. But because it's probably going to be a bit late till I'm in bed, because we're still going to watch an episode of Outlander, the update might be a little bit later as well, but at least this live stream has given a lot of information. I will put the timestamp in when we started the analysis, which I guess was around 28 minutes. I put it in chat, but I'm actually not sure. And then tomorrow morning, probably around noon, I suppose, Central European time, there will be a video update. So let's see what price does overnight. And then tomorrow afternoon, 1 second here, I got to check my agenda because I do have meetings. Yes, tomorrow afternoon, we go live. I have meetings in the morning and one later in the afternoon, so that works. Do you do live trading and scalping? I'm not a scalper. I'm more of a day trader and swings at times. I also don't do live trading. I personally believe that the portfolio someone has is private, right? Private information, the size, and it's not information that I am willing to share. Also, I think that sharing trades and stuff on YouTube is very much a clickbait type of thing. Instead of my goal of the channel is focused on education and not on trying to clickbait with $1 million positions. So, yeah, I earn more than enough money through my trading, but I don't, in my opinion, I don't want to need it to attract a certain audience to my channel. It probably also attracts the wrong audience to my channel. It's not the audience that I am looking for. Generally, the people that follow the channel here tend to be a lot more professional towards trading. More looking for education and improvement instead of signals and that sort of stuff, which is exactly the audience that I like as well. I mean, the channel has never done it, and we are almost at 15K by the end of the year. Gee, we're getting close. So, whatever we're doing, it's at least we do something right here, right? So I personally believe that your money is your private thing, and it's no one else's business but yours, right? So yeah. Elliott, you can scalp using Elliott waves, but scalping is just, it's not something that I like. It works for me. It's too intensive. I have a lot of other stuff going on. I can't spend time scalping, so I'm more of a day trader. And then, of course, occasionally, when the opportunity is there, I might try to swing. So, yeah. So, yeah. Yeah, I guess lucky deal in a way. What I'm going to change the memberships around and do some things, but occasionally there's like I share certain ideas, but I'm going to change memberships. So we'll talk about that when the new memberships go live 2025. So tells me not to recommend it. No, exactly. I mean, yeah, it catches the eyes. Viewers, of course, get invested in, oh, how is the trade of Crypto doing, right? Like, I don't need that type of content, right? Like, I'm happy with my trading and the profits and my portfolio size, and it's all big enough. It's, it's, yeah. It attracts a certain audience, a certain group of people. It's a certain. It doesn't provide value, because it provides entertainment. It provides entertainment. But it doesn't provide value. So, of course, I can, just like I did just now, I explain some of my entries over the past couple of weeks and days, which is value. But just showing a trade and, oh, look, yeah, I'm 100K in profit today, right? How is that going to help you? Like, what you're going to think? Oh, like, oh, wow, like, that's impressive. He must be a great trader because he's 100K in profit. Yeah, and what if you like only show your winners and not your losers? Then what? Because social media, right? Who says that every trade is out there? Who says every account is out there? Huh? Maybe there's 10 different accounts and they take like different trades and then they only show that account with the winner. Who knows? I think it's bullshit. I personally, it's really entertainment. It's not value. Don't really learn anything. I've been there. I watched those channels when I started, but yeah, it's more for the clicks, the entertainment. It's not. I don't believe it's valuable. So, yeah. You are doing way better than a signal provider. You're enabling, teaching people to have their own signal. Yeah, that's the goal. Yeah, helping people to fish. Right? What's the movie name you're watching? Oh, it's a series, Outlander, on Netflix. It's really good. We're approaching the end of season 1. Yeah. Okay, time to go. Thanks everyone for being here. Hopefully you enjoyed. And tomorrow, a new day, a new live stream, new video as well. So let's see where price is tomorrow. Thanks for hanging out. And I'll catch you at the next one.